right, guys, good day to you all. Sam here with you on, Wednesday, July 11th, kind of midday here. And as it's Wednesday, we'll do an update on Bitcoin, kind of a quick one here, but we've had enough movement here that it warrants a revisit. Now, I've got it up here. This is the 30-minute of Bitcoin to the dollar on Bitstamp, and I'll show you why I'm using Bitstamp. See, if we look here on Bitstamp, there was some question as to whether we had the possibility of a 1-2 because we had several exchanges where we did not overlap here. So this stayed as an internal retracement. However, let me show you. So here we overlap just barely here on Bitstamp, right? So eliminating the possibility for that to have been considered as a 2. But if we go over here, let's see, here's GDAX right here. So you see it on GDAX here, we don't overlap. So here's the pivot and we get this, I mean, it's close, but we don't overlap it here. So, you know, if you were trying to count that as a 1-2, the symmetry of it is just not as good. So the length and the depth of the 2 compared to the 4, it doesn't have the right look and symmetry that you'd anticipate in a good solid Elliot wave. So it would require, so since we come up short here, we have to have 5 coming down here. So this would end up being relabeled as some sort of a truncated 5th into a double bottom down here. And we can get the 5 in there. I've worked through those swing levels and it fits. So we can get that 5 down, so creating a truncated 5th here. So the point being, it's even if we hadn't overlapped on all of the exchanges, it still doesn't have the right look. So I'm taking the more conservative approach, allowing for if it overlapped on 1, that's enough to disqualify it. So I'm going to take that approach and use this as our pivot. The whole thing actually just works better that way anyway. So let's go back over here to here we are on Bitstamp. All right, so here where we have that slight overlap. So working from this 1 now. Of course, we have this ongoing problem with Bitcoin, or this, let's call it a tendency or personality of Bitcoin of difficult second waves, making it difficult to trade. So if you see here, we can make a case for a 1-2. It's not as close here. We have more of a gap here as let's see. I'll take it down here so you can see it. So you can see here's my 2. Here's my absolute pivot low here. So yes, it's deep. So if I'm calling this my 2, so if I take it up here, I go to my 2. Well, now we're to the 786. So it makes more sense, and I can get an ABC. So that's a reasonable, that's a pretty squirrely looking 1, and there's a lot of wick in there. Now I am on the 30-minute. If I went down to the 5-minute, I can dig out a 1 wave there. But I'm playing that as a 1-2, and then we go off again 1-2. So let me zoom back out there, and we can take this off here now that we don't need that anymore. So trading it as a 1, 2, 3, 4, and then we get this very nice subdivision into the 5th. I went through that in the last video here, so we know that. So now last time we looked at this, there was the possibility here that we're looking at a very shallow second wave, but I kind of made a point of highlighting that was low probability. So even though approximately 10% of wave 2s are only going to make it. Well, in this case, we don't even make the 38. So are going to be that shallow. It's still, there's 10% there, but it was lower probability. So the point I was trying to make is why force a trade there when you don't have the probabilities working for you? We know the higher probability for a wave 2 is between the 50 and the 618. Right? Statistically, that's what we're looking for. So my suggestion was, while that's a possibility, I'd be looking at the 50. So, we've had kind of there's a tricky little correction here. So we had considered the possibility that this was 1-2 and we had a 3, as that looked somewhat impulsive. We came down here as a setup. Right here was a possible 4 for us to go from that pivot there. Even as we came down here, as we approached it, it looked like we had the potential for that to go as a 5th. But it doesn't happen, right? So we get this crazy wick here that does not overlap. So I've relabeled it here as with anticipation that we might need to do that as we were looking for the wave 2 down here at least at the 50, knowing it could go deeper, can go, as we just showed it down here, and go from the 50 to the 786. That's the probability zone. Highest probability between the 50 and the 618. So we sit here now looking at this going, well, how do we count that? Since we have this clean impulsive structure here with nice subdivision, particularly in the 5th, and I showed you how Oh, I showed you how technical that was here, just to quickly review here. So even if I take the length of my 1 through my 3 here, golden zone, Vegas wave, we pop to target, right? So good subdivision here of in that fifth. So playing that as a 1, well, what we end up with here is an A, and then we've got this formation here where we're overlapping the wave 1 high just slightly in this wick, setting up what may well end up being an expanded flat, an expanded B wave here. So the B can go beyond the wave 1 high. We do see this. It's not terribly uncommon, and particularly since this is just looks like a wick pump here, much like this one. This is the classic bull trap, you can call it. Okay, so if we look here, you can see just looking to the left, right? So we see all of this. How many times have we come up here and challenged this area? So all of these wicks up here. All right, so we're fairly well established here that we have resistance 1, 2, 3, 4, 5 times. We've tried to push through and it gets rejected every time. So we have well established resistance. And as we can't get through, here was the push to try and get bears win it, right? So they take it down, and so leaving us the contender that we have this as our completed 1, we get an A wave down. Now we've got a 3-wave structure into a B, expanded B wave, looking for this to finish in 5 for a C. Well, sitting where we are now, as I just drew it up for you, right? So we can take this absolute low. Now here's where we got to make a distinction between looking what the algorithms will do and putting our Elliot hats on. Now, with our Elliot hats on, we're calling this the wave 1, so we're looking for the wave 2. So I'm drawing the retracement from the low to the wave 1 high, looking for a reaction here at the 50. And you can also see here that as we come into that, we get this low volume node here. All right, so just classic, and we get a nice little pop reaction from that, but it doesn't look terribly impulsive. We've had some algos kick in here. Now keep in mind that an algorithm does not care about the Elliott wave count. There's not some guy saying, well, should we buy it? I don't know. Is that close? No, they don't care. Was that an expanded B? They're just going swing low, swing high. And we're still to the 50. So not a radical distinction between the two, but I will defer here to the Elliott count, looking for that for a 2 somewhere down here, if I bring this over, right, somewhere between the 50 and the 618. That's our prime pocket for a wave 2. So look what happens here. So if we do get, so on the assumption now that what we have here is a B wave, we're going down for the C, then we're looking for 5. So we get a diagonal into the 1. Then we get this crazy wick here that does not overlap. It's very close. It's very close on Bitstamp, but just to make the point of this, where do I have it here? So here it is on GDAX. So not as close here on GDAX. So the 1 ABC into this as a 2 is more cleanly seen here on GDAX. Here's the diagonal into the 1 and ABC into the 2. We don't overlap. So you see a little more clearly here. But since we're using Bitstamp, that's where I'm keeping the analysis over here on Bitstamp. So trading 1, 2. Now note here the problematic 2 yet again. Just as we had it here, just as we had it here, we have the same thing up here, these problematic 2s. But there it is, it does not overlap. So 1, 2, I can come down for a 3. Now there is some, this is where it's a little tricky here. We have the possibility that the 5 could be in. So that supports the idea of us wicking the 50 and we go. So that would put us here, pretty textbook. So we'd have the 2 right at the 50. The ABC has completed. Of course, we're going to put a pitchfork on it to see if we get any benefit here from the market geometry. Pull that up. Well, it's not to the tick, but we do know from one of Andrew's trading principles that if we don't pivot right on the median line, often there'll be a hover, there'll be congestion around the median line as there's a battle between bulls and bears as to who's going to win. Before we get resolution here and move either towards the lower parallel or towards the upper parallel. So, you've got some confluence kicking in here. Now, let me take this off just so that we know that that's there and what we're seeing here. But here's what I think is more likely here. Acknowledging this is a candidate here, the 4, the length of the 5, the lack of subdivision here, I'm inclined to think that we're more likely looking at something like this. This is just leaning into the probabilities here that this we get a little 1, 2, 3, 4, 5 to give us the subdivision into our third, and now we're into some sort of an ABC or a triangle or something into our fourth. So if we draw this from our 2 here down to our 3 low, get it right on there. Well, this is a a contender here. So here, likely some resistance here will come into the 38. We have the Vegas wave right there, and then likely now if there's a rollover, it comes down into some fashion like this. So we get our 5 down to complete this C wave here and give us our second. Now in this case, note what happens here. Now take note here, I am hypothetical here. I do not know where that 4 is. I do not know this is the 3. I just have a pivot here and I have the 50. So on the possibility that we come up here and we pivot, and again, this thing could scream from here. I do not know this. But in trying to lay out the roadmap, which is what we're trying to do here, this is a better looking 4 to complete and come down here for a 5. Now take note, if we pivot in this range, and certainly we could go to the 50, but high probability zone here at the 38, then we've got this cluster here of prior resistance potentially and prior support potentially kicking in for that resistance. If we do roll over here, the emphasis word, if we do roll over here and we come down in 5, we'll note here if our pivot is in this range and this holds as our third, we get an algo target down here splitting the golden zone, which is why I'm kind of leaning into this as the eventual outcome here, so that we'd finish 1, 2, we'd be in that high probability zone for our second wave, and then from there we'd be looking for some sort of emotive wave reaction to come out of that, and we're looking for, we could have a diagonal, we could have something like this as we fight for a new trend. But it'd be even better if we get an impulse, right? Then we'll get a bigger 3 and a more shallow 4, and then we're off to the races here. And then we have a good candidate here as a potential wave 2 relative to this wave 1. So not being just purely speculative here and trying to lay out a roadmap based on the probability zones and areas that we know from patterns that are prone to repeating. So so there is the possibility, if you're just as comfortable selling as buying, you do have the possibility that this comes up into this 50 and algo kicks in and you get a push down here to get to that algo target. So, if we map that and we say, all right, if we get a 50, we know we'll have algorithms that will be there. If we take the other side of the 65 and then we're after that target down here, well, there's 4 to 1. Right, not terrible. Now, I would be disciplined on that stop. I'd have it just on the other side of the 65. So that thing, there's no... certainly nothing holding it down. It certainly could scream from there, so I'd want to be out there. So that range there is not too extreme, so call it 65.30 to 66.30. You got a $100 range there. All right, so that's a possibility, but I wouldn't do it at the 38, but I'd consider it my suggestion would be if you're considering and you're comfortable going short there, the 50 is the way to trade it. You minimize the risk from the 50 to the 618 rather than the 38 to the 65. So you minimize that risk. I wouldn't do it here, but if it comes to the 50, it's worth considering here. It's just a little punchy single. Your target down here is 61.40. So, 60, what are we, 65.30. It's $400 swing. So nothing wrong with that. Is just an intermediate length swing trade, just a punchy little single, and it sets up for the double here, so where you'd have the short into the long, right? So those are sweet if you can catch them. So you take the short down, then you're a buyer here in the golden zone. You get both sides of it, right? Not something to when it happens, it's about as good as it gets in trading when you get the swing down and the swing up. But you don't anticipate it, right? That's looking for perfection, which is quite elusive in the market. So no need to plan for it. Now, if we come up and we get to the 38, I wouldn't be a seller here. It's just not enough risk. The risk reward isn't as good. If we roll over there, then I'd be just, certainly eyeing this range down here as a potential buy. Hang on one second. I'm back. All right, so that's what I'd be eyeballing here. I've got this hot box down here. I'd be looking for that. Any other things that we can try and track onto that? Now I did show you guys the Gann angles here. That I'm going to show you a little fix here that I found for what can be an annoying issue. So if I showed you this in the last video here. So if we work off of this and we draw our little Gann angle here and we get to 45 degrees, well, then from there we can put our where is it? We can put our Gann angles on that, right? So working from that swing low, right? Here's my 1 by 1. Got to get right on there. So working from that at that low. So there's my 45 degrees. So here's my 1 by 1. Here's my 2 by 1. So we have a little confluence here. So there's my 1 by 1. So we're bullish above the 1 by 2. Now we've broken this, so we're coming down. If we break the 2 by 1, that would be short-term bearish. Right now, this is some potential support. Well, here's the problem, right? So if you start moving around or changing the scale, well, look what happens here. Then you're constantly having to tweak this, which is kind of a pain in the ass. So it took me a bit to find the solution here. I was just fussing with it like many of you may have been. So realigning it. Oh, let's get back to the 45. I changed the scale. Well, here's the solution. You get this little cog down here on the bottom right. We can go in here and we can lock the scale. All right, so now that 45 stays the same, no matter, right? All it does is change it. So if you're finding these Gann angles are useful, and I would encourage you, it's just one more set of technical tools to consider for confluence. By doing that, then you lose that annoying problem of having to realign it all the time. So just note that. So if you go back to auto, which is typically where I keep it, and then you want to shrink it down a little bit, note that you're shrinking the scale but not changing the angle. All right, so just something I thought I would share with you. All right, so here's a couple of things. So we've been working. We just hit kind of a nice little milestone. We just hit 30,000. Looking at our subscribers on YouTube and followers on Twitter. So with the break of 30,000, first I just would say thank you. We appreciate you guys following us and engaging with us. We hope you're finding value here, but we're working on something special that we'd like to offer to you. So I want to encourage you to give us a follow over on Twitter, and you'll see that being announced in the near term. So just a way for us to say thank you. We appreciate you. And with that said, I just would finish by encouraging you, if you really want to understand the wave count here and how to go through and do this work yourself. Well, you got a couple options. One, certainly you can learn more about us over on our website. That's tradedevils.com. And we also have so if you're a member, that would give you access to the members Discord. But we also have a public Discord where you can engage with us, and we'll do some technical work for you and with you, just offering you the opportunity to kind of sample what we're all about, engage with some of our trading coaches, just get a feel for the vibe and the community in the room. We've got, close to 1,000 people in that public Discord now. So that's something to consider if you're kind of thinking about becoming a member. That's maybe a stepping stone for you to get comfortable with it and get a feel for what we're all about. So with all of that said, that should give you enough to chomp on here for the remainder of the week. This will be kind of these critical levels here for bulls. We want to see these hold. So if we are coming down to challenge that, for that wave 5, we're coming down to go after that target. Note how we've got the 3 by 1 kicking in as potential. Now, they're always just that, potential support. Now, we'd have confluence here because we'd have the 3 by 1 right at the 618 and may set us up for a move to that algo target up there. Right, see that? Right, that would be a hell of a trade. Okay, guys, that'll wrap it for today.